Believe it or not, October 2022 was the best month for the Dow Jones since 1976. While this is awesome, there are some very important things you need to watch going into the first week of November because things are about to get especially volatile and we have some very important events coming up very quickly. So, looking at the stock market right now, over the past 2 weeks, we've seen a lot of green, even with all of the volatility that we've had in the market overall. Over the past 2 weeks, we've had some of the largest and most influential stocks in the entire market report earnings. Looking at the performance over the past month or so, and just even over the past 3 months or so for the stock market, it has been very mixed, to say the least, over the past 3 months. But when we look at the performance over the past 1 month, it has been pretty good, with the exception of a couple of the biggest stocks in the entire market. So, for example, we can see that for the most part, we're looking at a sea of green. However, there are a couple gigantic red screens staring at us, like Amazon down 15%, or Tesla down 14%, or even Google and Microsoft and Meta down quite a bit. So the main thing to know is that most stocks in the market right now are actually on a pretty good uptrend, as we can see, but we have some of the heaviest weighted stocks like Amazon, Tesla, and Meta, and Google kind of slowing the party down. And that's just interesting to know because realistically, we won't see a full-fledged, powerful uptrend like we saw in July if those key tech stocks also don't rally. You know what I mean? In order to see a nice, powerful uptrend, we need to see Amazon, Tesla, Google, and Meta start to pop up as well. The stock market overall can hold up fine and it can pop up a little bit, but to really reach the fullest potential, the market needs those tech stocks to pop up. Now, the important things to know right now is that we actually have more earnings on the way. So, most of the earnings are already reported, but we also have some other key tech stocks set to report, like AMD, Airbnb, we have PayPal, Coinbase, Square, Roku, Qualcomm, DraftKings at the end of the week. So we still do have some important earnings releases on the schedule, and that will definitely bring in more volatility. So that's important. That will definitely bring in volatility. But I would say the most important thing to watch for the first week of November is the FOMC event. So for those of you who don't know, basically we have the Federal Reserve set to increase interest rates yet again on Wednesday, November 2nd of 2022. Right now, the Federal Reserve is expected to increase interest rates by 75 basis points or 0.75%. And there's an 87.5% chance of that happening. So there's an 87.5% chance of the Federal Reserve increasing interest rates by 0.75%. Now, this is important because inflation has been out of control over the past year. We all know that. And when you increase interest rates, that just kind of slows the whole system down, which is not necessarily a bad thing. But the reason Wednesday will be so important is because we're going to see an inside look as to what some of the most powerful people in the entire world, aka the leaders of the Federal Reserve, are seeing with the economy right now and what their plan is going forward. If they say, hey, they really expect inflation to cool down and everything's going to return to normal and, it's going to be sunshine and rainbows, obviously the market would like that and stocks would pop up. However, if we have Jerome Powell and other key members of the Federal Reserve say some really negative things about the stock market and the inflationary environment right now, the stock market can sink in a horrible, horrible way. Most of the time, these events have a good effect on stock prices, but definitely not always. So I circled on the chart the past 3 FOMC events, which is what we're having on Wednesday. The most recent one, if we go back to the calendar, was actually on September 21st, right? And the stock market sank a good amount, actually. It actually made new lows from the recent FOMC event. It's not good, and it really depends on what Powell says and what is said at this event. That will be the driving force of how the market reacts. But we can see the last meeting actually made new lows for the stock market. The meeting before that was actually on July 27th, and the stock market reacted in a really good way. There was definitely volatility at first, but it ended up popping up, and the stock market rallied for like a week going into the event and probably like 2 or 3 weeks after. So that's awesome. And then if we look at the third most recent event, that happened on June 15th, and that actually marked the bottom of the stock market temporarily. So over the past 3 events, we've seen quite a bit of variation. You know, sometimes it pops up, sometimes it marks the bottom, sometimes it makes new lows, you know? So it's pretty inconsistent in that sense, but it all depends on what Powell says. And another important thing to keep in mind is that while we don't know for sure on direction of what this event will bring, what we do know for sure is volatility. You know, volatility is actually a great thing for the stocks, especially for short-term trading, because if you have like a strong trend, you can capitalize off of that. But even if stocks make new lows, you can dollar cost average into those stocks, and as long as they're solid companies and you've done your research, that can present an amazing buying opportunity for you. So that's important to keep in mind. Some other key things to keep in mind is that the stock market has rallied lately, not only because it has been very oversold and we've had some mixed earnings, but we're also starting to see interest rates like the US Treasuries start to decline. This year has been literally the worst year for bonds and treasuries ever, basically. Like, it has been such a horrible year, and the main reason for that is because inflation is like the biggest enemy of bonds. You know, like that it's really bad. When you have inflation at basically 10%, bonds just get absolutely crushed. And another important thing to keep in mind is that the government was basically pumping the bond market up over the past couple of years, and that artificially made bonds very low, or yields very low, I should say. So now they stopped that program, and bonds are just getting absolutely destroyed. And basically, when you have bonds getting destroyed, that means their yields rise up, and that's why we're seeing this giant spike up. And when you have yields rise up, that means that essentially it's bad for stocks because it hurts their present day valuation. So now we're finally starting to see yields calm down a little bit. If we continue to see yields flat or even fall down, that can actually be very good for the stock market. So you're seeing all the, basically on a lot of these financial news outlets, how the 10-year treasury is paying like 4%, and all these other treasuries are paying historically good amounts over like recent history. Basically, we want to see those yields calm down, and that would be very good for stocks. Realistically, we're not going to see yields drop to their basically their prices from 2 years ago, but what would be awesome is if we saw yields stagnate or even fall just a little bit. That would also be good for stocks. What we absolutely do not want is for yields to continue to pop up, because that would bring in even more panic than we have now. So that's very important to keep in mind. And another thing is that we always see big moves out of yields or bonds or treasuries during these FOMC events, which is tomorrow, November 2nd. So I know it's kind of confusing and a little bit complicated, but the main thing to know is that the stock market, you know, it's popping up a little bit right now, but it's not popping up enough. It's not popping up with enough powerful stocks. Like, yeah, we're seeing most stocks pop up, but some of the key leaders like Amazon, Tesla, Google, and Meta are actually sinking very rapidly. So we need those to turn around. The FOMC event on Wednesday will be extremely important. And even if you're watching this video after the FOMC event already happens, look and observe how the market is doing. We can see a lot of times these FOMC events act as either pivot points or like momentum boosters, you can say, for the market as a whole. For example, we can see in the past 2 FOMC events, the stock market was in an uptrend, and after the FOMC event happened, it just like boosted up even more. And even in the most recent FOMC event, the stock market was in a downtrend, and after the event already happened, that just rocket boosted the market down even more in a very quick way. However, in the FOMC event on June 15th, that actually acted as a pivot point for the market. So FOMC events are extremely important for the stock market overall. You have to observe how they are I guess you could say shifting momentum, and a lot of times they can also act as a pivot point. So keep that in mind. The stock market is going to continue to heat up. There's going to be continued volatility. Watch out for key earnings. This week's going to get crazy. Also, join the Stocked Up Discord group. It is completely free. We have a bunch of great people in the chat. It's an awesome place to be. You can chat with me all day long. If you're new to the channel, make sure to subscribe. I post brand new videos every single day. Besides that, thank you guys so much for watching, and let's have an awesome week.